performance is not indicative of future results. A quick run of the overnight news. Not much there to cover today. Before we get to the technical end, European markets are higher following sharp losses on Monday. Shanghai index ends lower by 1.7%. Remember, yesterday there was a very large one-day drop, 8.5%. Asian equity markets have stabilized overnight, but intraday volatility remains high. Risk appetite remains fragile for now. Gold is lower, oil is lower, the US dollar is lower versus the pound, higher versus the yen, higher versus the euro. Today starts the two-day FOMC meeting. The decision comes out tomorrow at 1 o'clock. Just now we got the May S&P Case-Shiller 20-city month-on-month index, negative 0.18%. This is a housing index, negative 0.18% versus expected 0.3%, so worse, 4.94% year on year versus 5.6% expected. Other than that, looking ahead today, we have U.S. Services PMI at 8:45. That's 15 minutes after the cash open, 8:45 of 9:45 Eastern. Expecting 55 is the consensus. The range is 54 to 56 for Services PMI. This is a preliminary figure. At 9 o'clock Central, we have U.S. Consumer Confidence Index expecting 100. The range is 97 to 103. And then at the same time at 9 o'clock Central, we're getting Richmond Fed expecting 7 as the consensus figure. As far as other news, not much else to monitor. There's a full committee hearing on the Iran nuclear agreement at 9 o'clock, so there's probably going to be a lot of posturing there. Not expecting that to impact the markets. Pre-open today, we had a whole slew of earnings, DuPont, Ford, Merck, Pfizer, and UPS. And then after the market today, we have Gilead Sciences and LVMH. And that's really it for what's expected on the calendar. Let's have a look at our technical picture. Remember, the Trader Bite here is not intended to be a place where you could just grab some trades and just put them on when the market comes on. The whole point here is to get your mind in thinking in a format that's likely to support your trading. So if you've been watching for a while, you've noticed the same pattern, the same sequence of events. Your habits are a key. Good habits are key to your ability to do this consistently, as I have. So I attribute my results in trading for so long now, 14 years, because I'm pretty steadfast about what I do every day and how I approach the market. So those of you who have been listening or following since 09, when I showed up on Twitter, was it 08 or 09, you probably see that unlike many others, I don't change what I'm doing, whether it's a crashing market or a rallying market or a balanced market. It is the same approach. And so overall, that's the purpose here. The purpose here is to get you to think on your own by looking over my shoulder in the morning as a part of the prep process. Let's see. Yesterday, the primary hypothesis, I'm going to read it off right here. It's exactly what I told you in yesterday's video. I said we were at 2064 yesterday when the Trader Bite was occurring. I expected responsive buying from 2064. I expected responsive buying to 2069.50, which is this pink line here. And then I expected sellers to take over and take this down to 57.50, which is about right there. 57.50, and then the expectation was for it to bounce around to decide what the next move would be. That was the primary hypothesis. We're aware that the market is back inside the lower microcomposite. I'll show you that again and why. I got several emails asking how it is that I'm able to predict it doing what it does. And really, there's no magic here. There's no secret sauce. The fact is, the market has fallen into the prior balance zone, has fallen back into the value area. This is a balanced value area here. You could see that it's pretty Gaussian in nature. And what the market did is it pushed through and into this value area. And so the target becomes the most traded price, which is the point of control, the microcomposite point of control. We call it MCV-POC. So that's the goal. Being as it was a gap down yesterday, we do expect that the overnight inventory would be short because it did trend down overnight. So we expected a push back up before it tested lower. It did not do that. What it actually did was to drop and then pop up, as you could see very clearly here. Remember, 57.50 is right here, and then our key target above is 69.50. What it did is it opened right here on this. This is the opening price here, these green dots. It went right to 57.50. Bounce back up, very shallow bounce. This rotation down was, in fact, an impulsive move. Very slow. It looked like an open auction out of range, but it did have some driving power to it because it just could not take back the open once it broke through the OS, the opening swing. Again, if you're lost by all these acronyms and stuff, it's just hard to keep saying the full words. Day in, day out. If you're lost by any of this stuff, just go to futurestrader71.com, futurestrader71.com/glossary. Anyway, we pushed through, we bounced back up, and then we took out the low by 4 ticks to 56.50, bounced back up, another 56.50 test, and then this is the key move here that predicted the next, what's likely to come next. This is a pretty decent impulsive move. You could see the delta going positive on the day, and so the expectation is for a pullback, preferably around the mid. This pushed through quite a bit, and then a higher high for a test of 56.50. So essentially, yesterday's levels were spot on. For Hypo 1, they were just backwards. The goal here is not, we want to and we hope to predict what the market's going to do. I'd prefer to just respond to what it does, miss out, take some price risk, meaning take worse prices and just get on a move that has some oomph behind it rather than try to predict a move and just get run over. For the rest of the day, the market really slid back into the initial balance, the first hour's high and low. What we ended up doing is we ended up putting a weak bottom. I talked about this quite a bit in the S5 chat room, that this weak bottom doesn't look so great. We had a nice taper on the high. You see this taper here versus what we had when we put in this bottom before this retest. We had a profile that looked something like this. It was very sharp at the bottom with a weak low, and then once it tested back through, it made a double bottom on the 15-minute, and once it did, the probabilities favored at least a 1 tick of this level, and lo and behold, it did not do that. It got to 56.50 and was just completely unable to take out the low before we had another pretty decent size move up into the close. Overall, the profile is somewhat balanced, a little bottom heavy, But it just looked weak to me. It looked like it was ready to continue rotating down. Again, the biggest area we have below us is 201150, an area that is not, that's the next microcomposite point of control that remains naked, and we don't usually leave them naked this long. I'll show you that here. From actually, the better place to see it is the composite. So here it is, this 2011-50. We have not tested this big microcomposite from way back from the end of October. We have not tested that, and we're a long ways away. So what have we done overall? As you can see here, we have been in balance for a while, and we finally started to push based on a resolution of the news on Greece, and have pulled back quite deeply. This move is quite normal. It does not mean that the bears are taking over, that the world's coming to an end, and the market has stopped rallying. This is very common, as you can see here, pushing all the way up, pushing all the way back, pushing up, pushing back, so on and so forth. It's just the way it's been trading for a while now. I personally, for my own trading, I prefer these pullbacks. I can trade these pullbacks a lot better than a market that is grinding up. I'm sure a lot of you experience some really hard trading sessions with this when it makes these moves. These persistent one-way moves are not fun for me, as they are not for many who day trade, but they're great for investors and so on. So looking at today, and I'm running out of time as I ramble on. Looking at today, we have an overnight session that's very strong. The Asian session showed a fair amount of volatility, which took us all the way up and through the European session. And then the European session also rallied and took us higher. The market's pulling back a little bit now, but overall we have a P-shaped profile, and a P-shaped profile with the market staying, making the stem, making this part. When we have a P-shaped profile, we make the stem early on. This signifies short covering. It's likely to have some short covering, some trapped shorts, as it then finally pushes high enough to bring the other side in, to its advertising prices high enough from the buyers to bring sellers back in. So it's key to watch today where this when this portion of the overnight session, the 2063 up till 2071 and a quarter, where we are now, we want to see how that's treated, because this is considered an excess low as it pushed through. These will show up as single prints on a market profile. So overall, you can see that the overnight session's point of control is in line with the point of control from last Friday. We're coming back into this this range, and if so, then we really want to keep an eye on this, as I said, 2071, 2070 area. Does it hold here, or does it fall back through? If it holds, then the template day becomes Friday. What do I mean by that? We're going to then start looking at Friday's trading as a guide for today. So here we are. This is where we are right now. The last price right here, 2070, 75, 2071. Inventory overnight is long. So the initial expectation, as usual, is for the market to try lower to balance the inventory and to test for a base. I expect pretty good support around the 2065 area. And then what I'd like to see, or what I expect to see as Hypo 1, is a quick push back up to 7350, chop, chop, and then I expect it to start crawling up, and then looking for this 2082.50 as the key target. That gives us about, from the low, if it does open and tests this 2065 area, that gives us 17 points, which is more than a normal day's range. But we do have some pretty strong short inventory now with this drop, and prices are such that they would likely attract buyers for a push. So the primary hypothesis is a small push down, potentially to 2065, if not 2062. I expect it to base in this area, and then I'm looking for buyers to step in and take it back into Friday's range. And when it goes into Friday's range, we're looking for the LVN to be tested, which is up here. This is a composite LVN as well as a profile LVN, and this is also the gap zone from the 13th. I expect this to come in and test the other side of the gap zone. So there's a lot of confluence in this area here, the 82, 83 area, and I'm looking for the market to test that. That's the primary hypothesis. Just as we're at it, because I think that primary hypothesis has a kind of a 50-50 chance, maybe 65-45 chance. The other potential is that it reattempts to take the overnight point of control. It finds sellers there from last Friday's high volume area, and then it moves down and it tests the overnight point of control. In this case, if it gets down, it tests yesterday's point of control. If it gets down into the 62 area, it's likely to push through into value low, because this is a balanced profile that we have here. So if it does test to 62, then I'm not going to be looking for buyers to step in until we get down into this 58, 50, 58 area. That's hypo 2. Okay, so I'll leave you with those thoughts. I'm not going to scan other markets or anything this morning. This is getting a little bit long. Don't forget, tomorrow is the Trade Wisdom session. Tomorrow's Trade Wisdom session is very important. We're going to talk about success. I have some very, very, very important things to say about that. I invite you to attend it. It'll be posted on YouTube later in the morning. It will not be mixed in with the Trader Bite, but I do invite you to listen to it. It's important stuff that I often share with my prop traders and so on. Good luck today, and I'll catch you tomorrow. Take care.